Dubai is increasingly connected to global cash flows. Cash means investment. A lot of the investments these days are going into venture capital, a word or a term you've probably heard about lately more and more as we see more VCs pop up in the region. Today with us is one of the founders of these VCs. Zafer, thank you so much for being with us today.
Thank you for having me.
So tell us a bit. A lot of people will ask this question because a lot of people ask me the question because they hear it more and more. What's VC?
Venture capital is an asset class. It's a way of investing in startups, typically used for the technology startups.
So basically you're a fund that fundraises from different people, creates a fund, and then invests in some startups that give high returns. Or that's the general idea of it.
Yeah, VC is like the name of the industry. And within the VC industry, there are VC funds, there are funds of funds, there are angel investors. You can say it like describes the whole ecosystem.
Excellent. Tell me a bit about Zafer. Where does it all start? Where were you born? How did you get to VC? Because your path is not typical of a venture capitalist.
Jordanian, spent most of my life in Jordan growing up, university in London, went back to Jordan, started a media company that my partner and I grew into a regional media house. Launched offices in Saudi, in Dubai, in Oman.
In media?
And then sold it, in media. In traditional media, we started with a radio station and then with a digital media and social media. In 2014, we had an exit. We sold the radio part to a Lebanese investor. And then I sold my shares in the digital agency to my partners. And I left to Silicon Valley, to San Francisco.
Why? Why Silicon Valley?
You know, we were probably the first in the Middle East to do social media as a service. We had the biggest clients.
What year was that we're talking about?
We started in 2007, experimenting with it. 2009, we launched a proper company, grew into a regional company. We had most of the telecoms in the region, some airlines, banks.
I bet, yeah.
We were at the right time. And what got me to thinking about venture capital or investing is that we had incredible insights into Facebook and Twitter and these social media technologies that were coming up. But I never had thought of buying shares in those companies. And I calculated the other day, if I had invested the profits of that social media agency in buying shares of Facebook in 2013 or 2012, it would have been a totally different outcome. 2014, sold my shares, sold the business, and I wanted to go and learn how this thing is done. Why, when I sold my business in the Middle East, services company, I got a multiple of 2 to 3x revenue, and Facebook was getting 100 to 200x revenue. Like, what's the magic?
So you went there without any job, without any specific mission except learning.
Yeah. Wondering like why are we hearing all these multi-billion-dollar stories coming out of Silicon Valley, out of San Francisco, the small city, and almost everything around the world that had $1 billion valuation connected to it had some dotted line
to Silicon Valley
or San Francisco. Like Careem at the time was probably the first unicorn of $1 billion valuation, and then you see it's like the Uber of the Middle East. And then where did Uber come out?
Silicon Valley,
San Francisco. So 2014, that's when a lot of new platforms were coming out, and VC was at the height of international interest. Landed there. Yes,
would you say that 2014 was the height of VC? Because VC, when you talk about VC, it's not something that we used to hear about 20 years ago or even 15 years ago, I would say, or at least mainstream, right? The number of people that I know now that are in VC is ridiculous. It's like a new industry. It's like I'm an engineer while I'm in VC.
Well, VC is about investing in technology, and what works well for VC is that every few years there's a new technology that comes out that sort of like creates a new high for VC, and we call these the super cycles. We'll talk about these,
like AI, for example,
sure,
today,
because like AI is another super cycle.
Yeah.
So that's what drew me to move to San Francisco. No green card, no job. I had one phone number in my phone saved for this very famous US VC called Dave McClure. I had been lucky enough to meet him in Jordan, out of all places, in over the Eid holiday. He planned his visit over Eid. He didn't know that it would be like a 3-day.
Yeah.
Everything is shut down.
And
I
you
was
spent
lucky
some
enough,
time
yeah,
with him. Yeah.
lucky enough to spend some time with him and introduce him to some people. And on the way to drop him off to the airport in Amman, he gave me his number and said, like, if you ever come to Silicon Valley, give me a call.
And you did.
I did. He invited me to dinner for Thanksgiving. He said, I spent your holiday with you, so you're going to come spend your holiday with us at home.
American hospitality.
American hospitality. This
Which could be surprising to a lot of people.
Dave McClure is probably more Arab than Arabs themselves. So, like, he's a wonderful guy. So we went there for dinner and gave me a job, which I, of course, very happily accepted. Yeah. I remember I landed in the US about the 14th of November, 28th of November, Thanksgiving, and 1st of January I started with 500.
What was the job?
An intern. An intern. They called me an EIR, entrepreneur in residence. I didn't even know what that meant.
Yeah. To you, as an intern. Same.
Yeah, same level.
Yeah.
And started on the 1st of January, not knowing much about this industry.
And that's when it all started.
Yes.
Or that's where your passion about it started. Not really your passion because you went there because of that passion, but that's where your apprenticeship, let's call it this way, started.
That's where the VC journey officially started, 1st of January.
And how did we get from that to Silicon Valley Venture and Innovation, or SVVI, that you've created now?
So honestly, the first job, there was a lot to learn. The learning curve was very steep. I felt like I was a dinosaur. I was coming from the radio industry and building a services company in the Middle East.
Yeah.
And then the other guy who had an EIR position at 500 had like $100 million exit. So
were they that ahead of us?
Oh, Silicon Valley is ahead of the world.
Yeah.
Silicon Valley is what, 50, 60 years old now, and it's been doing it for a while.
Yeah.
You have third, fourth generation VCs. And
so how did you catch up? How did you catch
Valley.
up with these people that were years and years and years ahead of you?
To be honest, I just worked hard. I worked pretty hard. 3.5 years of like just heads down, hard work. I became a partner at 500. And then I had the chance to move to another VC firm called Social Capital. I'm so thankful to Shamath Palihapitiya. He's one of like the most iconic investors in the world, for giving me a job. And that was like a step function in my career. Both, I would say, moving from Dubai to San Francisco to 500, and then from 500 to Social Capital. So I'm very lucky.
Zafer, when you were there, were they interested also in you and your skill sets because you were from the Middle East, or had nothing to do with it? You could have been from anywhere, or was it a mix of both?
I had to reinvent myself a few times along the journey,
like any eventual entrepreneur does.
I was offered, to be based in the Middle East a few times with an upgrade of the title and like even the ability to run my own fund. But I felt that I needed to learn
more
venture capital at the source in Silicon Valley, and not
where best to learn it than there.
Yeah, not to skip a few steps and launch like an international fund.
Yeah.
Which was difficult at the time because you're paying US taxes, and I just had a meaningful pay cut. I had 120 employees and reporting to me in the agency days, and then all of a sudden I'm an intern. And not just
another trait of an entrepreneur is you got to suck your ego in sometimes, and your ego, you got to keep it in check, or you suffer a lot.
Yeah, I would say I was very lucky to be given those two opportunities, and
Did you realize it at the time of how lucky you were, or?
I realized because it was so challenging to keep up with folks around me.
Yeah.
It's just that Silicon Valley operates at a different time scale, and people are just obsessed with efficiency and with getting
big
work done, and super laser focusing on like what's really meaningful and cutting out all the noise. And when you're sort of exposed to that for the first time, there's like an element of a culture shock.
Yeah, of course. All right, so you get this job with Shamat, and at that point it's a much more senior job than an intern, I hope, I would suppose. And how does that go, and where does that lead after?
I worked at Social Capital for about 1.5 years. The firm then had a big pivot, and then I was offered another role, which I moved to.
Okay.
About 2019, 2020, I started thinking of starting my own firm. That's when SVVI,
ago.
yeah, 5 years ago. I needed an anchor client, and luckily
You were still in Silicon Valley,
I was still in Silicon Valley.
and your ambitions was to start your own firm here or there, or you didn't know?
You know, I knew I wanted to invest in US technology.
Okay.
I knew that my best bet to get capital would be international investors that didn't have the access. And I was thinking my value proposition in this chain. And I figured, okay, I have a seed of a network now in Silicon Valley and a seed of a network
In the Middle East.
in the Middle East and in a little bit in Japan, because I had done a lot for 500 startups in Japan. And that's sort of like the idea, was to bridge Silicon Valley with some of the international ecosystems. Luckily, I got 3 anchor clients, that would sign contracts with my newly formed company at the same time. Those were AngelList, the famous, angel investing platform, and now it's like one of the largest asset managers in the world.
So they were one of your first anchor investors?
They were my actually clients.
Okay.
And then Mitsubishi Chemicals and the Japanese government.
So it started from Japan, not from the Middle East?
It started from Japan.
Interesting. Jordanian guy getting his first investors from Japan into Silicon Valley.
It was interesting. I had spent a long time in Japan prior to that, because I was traveling to Japan for 500 a lot, and that was like the nucleus of the company.
Yeah.
I called my all-time partner Ramzi Halabi, and
which I've met. Very nice guy.
Which you've met.
As a shout out to Ramzi.
Absolutely. And I called a friend I had newly met at the time called Jumana Sadi. Now she's been a partner of mine for about 5 years. And I told them, like, we have some great deals here and we can bring those deals to investors in the Middle East. We can also bring some know-how and some services. And they said, let's do it. And we started SVVI.
Just like that. Amazing. Fantastic. What's more important, Zafer? To have access to in VC, to have access to a deal flow, or to have access to investors, a mix of both? What would you prioritize? I know I have an idea of what your answer is going to be, but what was more important for you, or what was more scary for you, to have access to that deal flow, or to have access to the investors that will give you the money to create your fund?
Ultimately, having access to the right investment opportunities is more important. Because if you have the right investment opportunities, you'll get the capital. The issue that we face often dealing with non-specialized investors is showing the true value of the deal flow that we have. Because true differentiated deal flow, you need like an expert's eye. Now, luckily with time, people start trusting you when you deal with them over and over, or when you tell them about a company, they don't invest in it, but then they see that it's like 10x, 20x, 30x. And you build a reputation and you build trust, and then people would, not maybe really care about getting the concept of the company as much as your conviction in it.
Yeah.
But that takes time. And I would say we're at the midpoint in our journey.
Yeah. Do you have a lot of friends who are investors?
I've been in the industry for 11 years and
all kinds.
I work very hard. Like, I work, most of my time is at work. It doesn't feel like work. So naturally, most of my friends are...
That's another trait of an entrepreneur that we hear often. Doesn't feel like work.
Yeah, I enjoy it. To be honest, technology is like ever changing, and you're learning something new every day. It keeps you young.
What do you not like about it? About this let's call it this job or this venture? What is it that you don't like about it? There must be some things that you don't like.
It doesn't allow you to stay in a comfort zone. Like, you get comfortable with the technology and you call yourself an technology investor or like an expert in this technology, but then a few years later it becomes like obsolete. Yeah. So you need to be always learning.
We hear a lot about this access to deals, right? Most of the VCs that I've talked to, or that have pitched to me or to us, the partners at Virtue Zone, always brag, I would say. Maybe brag's a strong word, but yes, I would say brag about their access to deal flow, their access to this deal or that deal. You would think that, and forgive me, I'm simplifying this for our audience here, but you would think that anybody who's looking to raise money would welcome money from anyone who's willing to give it to them. So tell us a bit about this having exclusive access to certain deals, having exclusive access to certain cap tables. What is this phenomenon of we pick and choose whose money we want?
Yeah,
Shed a bit of light on that.
That was like the biggest cultural shock for me when I first arrived into Silicon Valley. Because in the Middle East, for us, you know, if you have a checkbook, everyone's gonna come to you. Everyone's gonna smile. Everyone's gonna be nice to you.
Just give me some money.
But then if you look how these tech companies are built, and specifically the giant outcomes, like the big wins, they're typically built by people who have had some form of experience in another tech company or another tech giant. So now when you see like a second time founder or a third time founder, a third time successful founder in Silicon Valley wanting to start a new company, all the VCs are basically competing to give them money.
Because he's got a track record.
Whose money are they going to take? Relationship definitely plays
a
role, but if they are really sharp and if they're the best kind of founder, they would make their decision based on value add. They would pick the VCs or the investors that would give them the most value.
And where does that value come from? What value does a VC provide?
There's so many different, like each VC firm would articulate their value proposition differently.
Is it in forms of advice, in form of relationships, in form of financial deep pockets, in form of technical advice? Or is it a mix of
all of the above? From recruiting to helping you get your first customer.
Yeah.
But typically, here is the thing, and I remember Shamath once explaining this to us, is like, if you want to attract the best and the smartest and the most accomplished founders, you need to give them something that is really hard to get. Because almost like all the easy stuff, they're going to know how to do.
Yeah.
They're that accomplished, like hiring and a presentation or
especially
like getting
if it's
finance.
the third time they're founding something.
Exactly. So like, go and look for something that is a real value add. And at Social Capital, we had a 40-member engineering team, AI engineering team, that were all like alumni of Facebook. They had built Facebook's growth engine.
Full technical knowledge was there.
It was giving the founders something that was very difficult and very rare, and that even money couldn't buy, like expertise that are not commoditized in the market. So that worked very well. Each VC firm has a different one, Andreessen Horowitz is known for this, like building a full consulting firm within the VC firm that is dedicated to helping
it pays off for
the
them.
startups.
Yeah.
They're world famous for it. It shows in their returns. It's a thing. I think Middle East VCs are also doing that as well. Today they have a lot of value add teams.
Yeah. What's the biggest risk you would say you were taking when you decided to press the button and say, you know what, I'm doing this? Because here's one thing. I'm gonna tell you one thing now from an investor perspective, and this is something that I hear very often. So perhaps you can shed some light on this and give us the other side of the story. A lot of investors today in VC, and like you said, you correctly said, a lot of the investors are don't necessarily have the knowledge of VC, or don't have the previous experience with having dealt with VC, the cycles, how long it takes, all these things, right? And tend to become impatient. One comment that I hear very often, and again, this is for the benefit of our audience. Yeah, you know, these VC managers, they take their fees, we invest all the money, they have zero risk to take because at the end of the day, they're getting their fees anyway, they're only taking a cut on the upside if they make us money. What are they laying on the table in terms of risk or so that? So my question to you is, what was the biggest risk, or today, what is the biggest risk that you're taking by actually running a VC fund or a VC firm? And I know the answer, but again, I want you to
every day it's a new risk.
Yeah.
Just yesterday, literally like yesterday at night, at about two nights ago at 11 p.m. we landed this amazing deal talking about access. 3 of the top Silicon Valley VCs are backing this company. It grew from $7 million to $200 million in less than a year. I know this. I've been tracking this company for 18 months. I know that everyone in Silicon Valley is fighting to get an allocation. It's a $140 million round, and here in my inbox,
which in VC terms is nothing. It's still the beginning of the road.
And here in my inbox is this good friend that we've made that is telling me, you did me a great favor, and I'm paying you back. I'm thanking you by sending you $1 million allocation in this company. And you know, I was like, probably we have like 12 hours
to fill
to decide.
Yeah.
if we're gonna do it or not. Get the whole team, all hands on deck. Because also we work, you know, our night is their day is our night.
Of course.
Then get the money. Where do we get $1 million like overnight from to make that trade?
Yeah.
And I decided to just borrow it. And I'm like, I know this.
That's a bit of a risk.
Yeah, it's a bit of a risk. But you know,
Yeah.
I've been watching this company for a while, and I know we can do very well with it.
Yeah.
And
Yeah.
the investor because I didn't want to like, I wanted to take it for the firm.
Yeah.
Called one of our top investors,
yeah.
and they were like, would you sign a promissory note yourself and we'll wire you the money? We needed the money to execute the deal, right? Because we have like only hours to execute the
Yeah.
deal, and then we'll figure out what to do with the allocation. We'll get other investors to take it.
Not a problem.
We'll sell
We
it
just
on.
need the cash.
We need $1 million in cash to do this within 24 hours. And like, of course I would. Like, I've been waiting for this company for
I'm
like
waiting.
a year.
I'm waiting for you to send me the
Maybe we'll give
opportunity.
you, maybe to thank you for this
The
podcast, George. We'll
opportunity.
give you a small allocation.
I'll give you $1 in it. I'll give you $1.
So people sometimes underestimate how difficult this access is.
Yeah. No, exactly. That's why I'm bringing it up.
We honestly had to work for months mapping all the investors in this company, connecting with them one by one, and telling them if one day you didn't have enough funds in your fund to fund a downstream round of this company, just call us and we'll help you raise that money. Then we started doing favors to like people on the cap table just to build the relationships to access the company, because when you catch a company that has that 100x, 500x,
that makes or breaks your fund.
especially if you have conviction.
Yeah.
And you know, you look at we look at hundreds of companies, we look at 300-400 funds every year, and when you see a good one, sometimes you know it. And that's a good one. I have a good feeling about it. Let's see. We'll find out in 5 years.
How do you how do you, Zafer, how do you manage the decision making, like such a decision making like this, especially when you're dealing with other people's money, investors' money? You know, anything goes wrong, it reflects on your. And like we say, you know, in this business or this industry, you have one chance. I love this question. Yeah, you have one chance.
So we have managed funds. We have two types of sort of services or products in our platform. We have managed funds, and this is where people would trust us with their money.
Yeah.
And we would take the decision.
Mm-hmm.
And that is our fund of funds strategy. And there, the decision-making cycle is about 3 to 6 months.
On every deal?
On every deal.
Wow, okay.
And then we have the non-discretionary. This is when we show you a deal and you decide.
This is the stuff I love. Yeah.
If you want to participate, or is it for you, is it not for you? So the second bucket, that's where like last night.
But this is where the higher rewards are in general.
Yeah.
Maybe not. I don't know. But I mean, this is a bit more of a. Forgive me for the very, very archaic or simple expression. This is where some rolls of the dice happen as well. Calculated rolls of the dice.
I know people call it calculated rolls of the dice, and people often like to say it's like playing poker, or like it's like playing roulette.
It's gambling, yeah.
It's gambling in a way. But there must be a reason why the top 10 or top 20 performing VC funds, or the top 50 performing VC professionals
consistently perform
well, in up cycles and in down cycles. I believe there's much more science to it.
Of course. Yeah.
Than art.
Yeah.
It is, especially if you know what you're doing. Maybe in international ecosystems where you don't have as much information and much density of signal, it is more of a betting game.
Yeah.
And that's when you see like more volatility in returns. In Silicon Valley, I think the ecosystem is mature enough
that only the strongest survive.
Yeah, it's a cutthroat, very competitive business.
Zafer, obviously in venture capital, there's a lot of risk involved. How do you manage that risk? How do you, especially sometimes dealing with, or most of the time dealing with other people's money, because you only have one shot at it sometimes. You know, you make it or you break it. If you don't do well, then your reputation is shot. So it's very important to get it right the first time, the second time, for your funds that keep on recurring. How do you manage that?
So for anyone who's thinking of investing in venture capital, they need to know that you have three different paths to go. You could
Okay.
either invest in companies yourself,
Mm-hmm.
and you go and invest in direct companies one by one.
But would you have the access?
That's a different question,
Yeah.
and it's a very important one.
Yeah.
But let's say you believe you have the access, and you have a friend who's
Okay.
starting a startup, and
Yeah.
then a neighbor that's starting another one, and
Because that's VC as well. It doesn't have to be Silicon Valley.
absolutely,
Not the same level, but yeah.
absolutely. But then that first building block is investing in companies one by one. The issue with that is that the risk is so high.
Yeah.
Because those companies are most likely to die.
Make or break, and most of the time they break.
And then one safer way to do it is to go and invest in a VC fund. So you find a VC manager who is professionally investing in startups
Who has a track record, who...
with a track record, ideally. And what they typically do is they invest in a series of startups or in a group of startups, 20.
Yeah.
And that's a fund. And you're protected by that portfolio approach. So if 10 would fail, the other 10 would do well. They would cover up for the losses, and you'll
Remind me
make a
to
profit.
ask you a question about that right after you finish this.
And then our approach, so we run a fund of funds. And that's investing in 9 funds, where each fund would invest in 10 to 20 companies. It's the least risky
one.
approach.
Yeah, yeah.
To be honest, we're all the way here in the Middle East, and most of our investors are from the region. So how do you play this Silicon Valley game? Silicon Valley, it's the NBAs of investing, very competitive. The best deals are
It's the Premier League.
oversubscribed.
Yeah,
So how do you get that access? That's our way of gaining access.
yeah.
And it happens to be the least risky way. Now, personally, I love investing directly into startups.
Me as well.
And I'm okay with the risk as long as I'm dedicating a smaller budget to it, something that I can manage and
Play money.
play money, if you want to call it that way. So we offer 2 programs at SVVI. One is a fund of funds program, and this is a risk mitigated way to bet on technology, where we take your money and invest it in 9 fund managers. So you end up with a portfolio of fund managers in each, with a portfolio of
More
companies.
importantly, exposure to so many different companies.
And we also have that high adrenaline, high octane direct investment program, where sometimes when we get interesting deals,
Yeah,
we show them to our investors, but then it's their decision to actually
yeah.
pull the trigger or not, each according to their risk appetite, check size, industry. Some people have an advantage. They're working in biotech, and
Yeah.
they know
They
a good
have access
biotech
to it,
company
yeah.
when they see
Nobody
one.
else knows it. Yeah. Zafer, what would you say? That's a question that gets asked to me often. In our business, at least, because in a different, if you want to, seen from a different lens, is out of 5 businesses, for example, we can tell you that 4 fail after the first year, right? And after the second year, 2 out of the 5 have failed, and so on and so forth. Come to year 9, only 9% fail, right? In terms of startups, right? And we can't look at all startups. Let's say startups that get to Series A funding, for example, which means that they've gotten to a mature enough level that they are interesting enough or serious enough to be looked at by serious institutional investors, if you want, or so on and so forth. How many out of 100 will actually end up being successful enough in terms of investment? And let's call that, anywhere from 3x and above. How many out of 100 will end up being that?
The issue with venture capital is that, or with startups in general, is that anyone can start a startup today.
Yeah, correct.
So the amount of noise is very big.
Yeah.
So if you look at it as a whole industry, the averages are scary.
Mm.
And
Very low.
the statistics wouldn't encourage anyone to start anything ever or invest or do anything.
Because you have the goal that 1 out of 1 million makes it, or
Yeah,
whatever.
exactly. Yeah, and it's just getting worse and worse,
Yeah.
because
Everybody's done. Yeah.
more people can start,
Yeah.
and the setup cost and everything is much lower.
Yeah.
But when you start looking at the top VC firms and who they're investing in and the success rates, it's a totally different
Ball game. Yeah.
ball game. So the VC industry, we have about 5,000 VC firms around the world. And when you rank them, not around the, sorry, in the US, 5,000 active VC firms.
Yeah.
Those 5,000, when you rank them from the best performing one to the worst performing one, and then you look at quartiles, the top quartile, you cannot even compare it to the second quartile or the third or the fourth quartile. It's
that
very
difference.
concentrated.
Yeah.
It's like a pyramid. The top decile is an asset class of its own.
And that's why they always say, oh, so or so have invested with them, which is a big deal because they're from the top top percentile or whatever it is.
So it's a lot like universities. If you ask me, like, what is the average IQ of a university student globally?
Yeah.
And then you ask me, like, what is the average IQ of a Harvard student? It's exactly like the same kind of thing.
Do you think there's an element of luck?
I don't believe in that, because the top 20 VC firms and the top maybe 50 investors are always the same.
Yeah. So it can't be.
They make money, on up cycles, down cycles.
Okay. What's the biggest mistake you would say investors make when approaching venture capital?
The beginners not just investing a lot of money in one startup and not building a portfolio.
Yeah. That's never a
that's
good,
the classic.
Yeah.
But I think the more advanced, investors in the region, they somehow believe that they can build a portfolio and compete with a VC. Like, you have a professional company doing it with a team of 20 people. They're working
and they're
every
putting in
day.
Bigger tickets for better
They
access.
have job titles and promotions and bonus systems and here you are by yourself doing this after working hours.
But as little information as possible because you don't have the time.
Thinking somehow that you're gonna
beat
the professionals at doing it to save a little bit of fees that the VC firm would charge you.
Like we say in Arabic, give your bread to the baker even if he eats half of it because they know how to do it better.
Well, the VCs hopefully won't eat half of it.
No, they don't.
Eat 20% of
it. What's one reality, Zafer, about VCs that people don't know or don't talk about, or your average Joe doesn't understand or doesn't know?
I think people underestimate how difficult it is to build a VC firm, and I fell into that category when I was a founder. I hated VCs. These VCs, man, they're lazy. They don't do anything. They're like, they just have the money. But people sort of like look at the fact that the VC has to go and raise the money themselves one day. And when they decide to launch a VC firm, they have $0. They're taking a risk, and they go and they fundraise. And if you don't do well in your first fund,
you're dead.
Yeah.
That's what I was telling you.
So that is a risk.
Yeah, that's a huge risk. Do you see regional differences in investors between investors from this region of the world and their peers in other parts of the world in terms of risk appetite? Or are they more or less similar? VC by definition, do you agree with this statement that VC by definition is high risk? Is a high risk asset? Or not anymore? It used to be at the very least.
But some VC platforms, like, you look at their performance for the past 20 and 30 years, they've been around for that long and they've been delivering.
Yeah, okay. So
returns.
So put that question aside. Is there a difference in risk appetite between the Middle East investor and, let's say, the European investor or the American investor?
The issue with venture capital is it's the fastest growing asset class.
Yeah.
When you have such a fast growing asset class and it gets so much hype and catches so many headlines, you have a lot of noise.
Yeah.
And if you can separate noise from the real signal, you're in a very good place.
Yeah.
And this applies to you if you want to invest in a single startup, or if you want to go and invest in a fund. Because even now, there are too many fund managers around. So how do you pick? Yeah. How do you pick? We actually meet with about 400 VC managers from the US every year to pick 4.
Wow.
And I'm not telling you it's an easy choice.
No, of course not.
So it is an asset class that has been also exclusive to either very rich people
in the past,
or endowments and pension funds and governments,
investors. Yeah,
because you need the minimum tickets and you need to like really understand the asset class. There are players like ourselves and many others actually internationally and in the region that are trying to, I don't want to say democratize it, but lower the hurdle, because a lot of people believe that this AI thing and technology is changing the world. And people see that these private technology companies are reaching hundreds of billions of valuation while they're still private. So my sister calls me the other day and she says, I want to invest in OpenAI. Like, first, the right time to invest in OpenAI was probably 8 years ago.
Yeah.
And second, it's not public. Like, to go and get OpenAI shares today, you have to go through secondaries markets and probably like a higher minimum ticket. And it's not like easy. It's not very accessible for everyone. So how do you play this game? Like, I'm sure you believe in technology. I'm sure a lot of the listeners today believe that technology is changing the world, even at a faster rate. But how do you go and actually play it? How do you place a bet? That's what we're trying to do at SVVI.
Yeah.
Making it accessible to families in the region. AI today is, I believe, one of the biggest changing powers of the world. Like, the world as we know it is changing.
You think it delivers the strongest value opportunity today? AI by far? No other industry comes close to it?
So it's a horizontal,
of course, it covers a lot of industries.
Power of nature. It's going to disrupt almost every industry that we know. And people already kind of like use it, and they are, I would even say, addicted to it.
So if the right time to invest in OpenAI, like you told your sister, was 7-8 years ago, what is it the right time to invest in today? What kind of AI, or what are we looking at in the AI industry that it's the right time to invest in today?
So let's just look at the super cycles.
Yeah.
You look back all the way to the desktop. And this is, when computers used to fill a full room. Someone invented the desktop. You can put it on your desk with a screen, and you can do some calculations on it. So that is a foundational layer. And then immediately after, you had an operating system, and you had Excel or Lotus at the time, 123. Word processing, when instead of like typing on a typewriter, you can actually edit and delete and then print. And so you had a foundational technology, which is a screen and a desktop computer, and then a layer of applications that were built on top of it. And that application layer generated big giants like IBM, Microsoft, and Apple. And now you look at the next one was when the modem was connected to enough desktops around the world. So that's the foundation. Enough modems around the world. And then the application layer on top of that is the internet browser, Amazon, Google, a search engine. Did we ever know the word search engine before it was invented? We didn't know that was even an application that we needed. I do remember the modem days. I do remember the first time I heard about Google. So again, a foundational layer. On top of it, you have this application layer that generated giants like Google, AOL, Yahoo, Firefox, Mozilla, and all of like the original Amazon giants of that era. Then probably the next super cycle was the mobile phone, and now you have a mobile phone with a camera and an app store, and that's the foundational layer. You have it in enough pockets and enough hands. And then you have Uber. So Uber was impossible to build before the smartphone and an app store. You have Instagram, WhatsApp. Those are like giants.
It's very interesting the way you're saying it.
Billions of dollars of opportunity were created
because of the foundational layer.
And one thing you see is that a few observations. One is that each super cycle is bigger and creates larger economic value than the one before, because they are all built on top of each other. The second observation is that these giants are not born out of vacuum. They are typically alumni or spin-outs from
the previous layer.
So now we have what we believe is the infrastructure of AI. So we have the LLMs, we have enough data centers around the world, and more importantly, we have consumers, hundreds of millions, if not billions of consumers that trust in asking AI a question and getting the right answer.
So now we're going to see those sub-layers or
so now the application layer is going to be built.
And are these the kind of companies that you're looking at now?
Exactly. That's what we do. What we do is we look for VCs that are best positioned to take advantage of this super cycle, to find the next group of generational companies.
Zafer, we're gonna wrap it up with a couple of questions. If I'm an investor today that has a bit of money, a bit of cash lying around, and I know that my friends are investing into VC and these things, but I don't have any VC investments. What advice would you give me on how to get into this sector?
I believe in diversification. So you need to either find a VC firm that you trust in or a fund of funds that you can go to. It is not an investment for everyone because it's a very long horizon investment.
How long is the horizon, just for the benefit of our listeners?
People like to say 10 years. I don't believe it's 10 years. Sometimes it's much shorter. We've seen exits happen in like
3, 4, 5 years.
Even 18 months.
Yeah.
But if I am advising a friend, I would say invest an amount of money that you're willing to lock for about 10 years. The payback period, average payback period for top quartile funds is like, I don't know, 7, 8 years.
A good return on a VC investment is what, in your opinion? $1 million question. If you're investing your money, what's a good return for you? Of course, 500x is great, but what is a realistic return people should expect from a good VC fund?
So I mentioned that ranking of VC firms.
Yeah.
Where you have 5,000 VC firms in the US and you rank them by
the top percentile, the top quarter ones.
Top decile is clearing 33% net IRR.
Okay.
Top quartile is clearing 22, call it 20 net IRR. Median is like, I don't know, 5%. Don't quote me on these numbers.
No,
they change all the time.
It's just out of curiosity, yeah.
But it's in that range. Compared to other asset classes, it's superior.
Yeah, it should be because of the risk that's involved as well.
People sometimes tell me like, but if you bought the index, last year it's up 60%, but then you have like 3 years when it's like.
And if we had a crystal ball, we would have bought the index.
If you can time it.
Yeah.
If you can time it, VC has consistently delivered returns over time.
Yeah.
It takes time. It's consistent if you're investing in the right funds.
Excellent. One last question that I'm going to ask you, and I want you to finish this sentence for me. Successful venture capital investing requires ... And it could be one thing, it could be 12 things. I want to finish on this, so the person listening to us that says, I'm going to invest in a VC fund, they finish with that and they keep that in mind. Successful venture investing requires what?
It requires definitely discipline first, because it's a long-term game, and you need to know your specialty. You need to have a specialty and stick to it.
You believe that, right? You believe that that's why we see a lot of the VC funds, they invest in certain niches.
Yeah, it's very difficult in today's overcrowded money market
to keep abreast of everything,
to win the right deals, right? Like there are so much money for technology, chasing technology companies these days worldwide, even in the region where founders often would complain about liquidity or funding that's available. A mentor of mine used to always tell me like it's 10 times easier raising money for any startup today than it was raising money for a startup in Silicon Valley in the 80s. So there's definitely more money chasing deals today than ever. And if you're an investor, you need to figure out a strategy to beat the market, because probably the average in the market isn't going to be great when there's too much money.
Yeah.
So now what's your strategy as an investor? So you asked to be a good VC or to be a good venture investor. I would say you need a strategy. You need a clear strategy in your head, and then you need to execute it well with a discipline. It's very similar to any sport, any business, any profession, right?
Yeah.
A strategy with good execution.
Super. Zafer, thank you so much for sharing your insights with us. I hope that our viewers were able to understand VC more. There's so much we can talk about. We can talk about it for hours and hours, but I really appreciate your insights and your honest feedback on all these questions. Sometimes uncomfortable, I must say.
George, thank you so much for having me, and thanks for the audience for watching this, and VirtuZone, of course, for the great work.
Thank you so much. Thank you, everyone, and I hope we enjoyed this episode and you enjoyed Zafer's insights. Thank you.